Hey all, welcome to ShareTreck. It is the 20th of April 2022 and this is our daily update. Three parts as usual. The first part, news and geopolitical events. Second part is going to be analysis of Nasdaq, cryptocurrency and all the other indicators, just to find a hint of where the market is heading for the day. And the third part is going to be Genomic shares, doing some technical analysis to look at price action for the day. And that will be done once the market opens. So right now we are before market open. Let's get started. Well, here are the headlines that I would like to bring forward to you today. The first thing is Netflix result were below par. They lost around 200,000 subscribers. So it kind of cast a shadow on Nasdaq. However, all is not bad. As we'll see later on, there are some good results also that are there to push Nasdaq to the positive. But overall, the scenario is still pessimistic. And I'm still concerned about why yesterday we had a rally. And I have been researching on finding out the reasons. And I got two explanations in the market. One of them comes from Jim Cramer. And what Jim Cramer is saying is that the market was oversold, which makes it harder for stocks to plummet. Therefore, stocks were more prone to go up. That is one thing he said. I do not buy that because just because stocks are plummeted doesn't mean people are going to disregard all the headwinds and just buy now, rather than wait for a later opportunity. Cramer recalled that in 1994, when the Fed doubled rates and stocks still rallied, and if history was any indicator, Bullard's tough talk might not be so bad after all, he said. Again, I don't buy this because investors do not invest because Fed is one of the Fed governors is saying something different from all the others. It may have a minor impact, but I don't see people putting in their money in the volumes that we saw yesterday. And one more reason Cramer points is that the market resilience on Tuesday is that US is in a better position than other countries, pointing to America's reopening economy and reliable energy sources. And again, I do not buy that. America's reopening economy is beset with supply chain problems, which is what is causing the increase in prices and the inflation, which is what the Fed is trying to address. So I don't buy that either. Reliable energy sources would have meant that despite the Russia problem, we wouldn't have had any impact in the US because we don't import any Russian oil of any significant quantity. So I don't buy that either. And finally, Cramer says, while inflation is admittedly a problem, he thinks that we got higher flank steak prices, more expensive cornflakes and bigger gasoline bill, but we also have much higher wages to combat the pain. I don't buy that either because as we discussed in our earlier videos, the wage hike has been 2.5% below the inflation. So the real income increase has not happened. Instead, income has fallen by 2 to 2.5% in real terms. So I don't buy any of what Cramer has said, but he's a big guy with a big platform, and he's got to justify what is happening in the market. As far as I am concerned, I have just admitted I'm an ordinary investor, so I'm not looking for any fancy things. Unless I'm convinced, I'm not going to bring that to you. However, FundStrat's Tom Lee had some observations which seemed plausible to me. So what Tom Lee is saying is that when the income tax due date came around, people were in the process of raising money for the tax day. And typically people like to book their losses so that they can offset it against their profits when they file their taxes. So they are not much concerned about the price at which they are selling, because if they can book losses, they can reduce their tax bill and they can get back into a position in the market as soon as possible. So that they can start reaping the gains again for the next year. So that makes perfect sense to me. So he has this chart here with the S&P 500 where he's saying that this downfall is towards raising cash for the tax day. And having done that, now there will be people getting tax refunds and all that is going to get back into the market. And we are seeing an increase here. Now, I buy this logic from Tom Lee. I think this is probably what happened, and this is what I think I missed in analyzing the market last time that we saw it. Now, next, moving on further, chipmaker ASML reported excellent results and may boost Nasdaq. So for those who don't know ASML, it's a company which manufactures chip making machines, and each of those machines are very, very precisely manufactured, and they've gone into higher level of precision, and they are a very valuable company, and they are going to open more manufacturing units, and some in the US, in order to meet the demand from chip makers. So ASML's result is going to boost the Nasdaq as against Netflix result kind of trying to push it down. And ASML results will also give a positive impact to all the chip makers in the market today in Nasdaq. And the other news I have here is that the researchers at Northwestern universities have identified genes associated with HIV infection and replication. They have identified additional 80 genes that were not originally known, and with CRISPR they would be able to, they have done all this with the help of CRISPR, and with CRISPR again we'll be able to edit those areas of the genes and try to find a cure for HIV. Right now HIV cannot be cured, it can only be managed and controlled, and if the medication is stopped, then it goes on into AIDS. So that's the scoop out there, which is a very positive development. I think I mentioned this in an earlier video also a couple of months ago, but I thought it's worth mentioning again because it's come up in the news again. Then the next news I have is the new GMP manufactured Cas9 protein enables clinical genome editing research. So this is what the box looks like. It's like any other box of maybe insulin or a vaccine that we might get. I wish they had made a much more colorful packaging for this, but this enables much more precise gene editing, especially almost 90% of human cells can be addressed through this product. Also, what they are saying is that the GIPCO CTS TrueCut Cas9 protein provides consistent high editing efficiency in all tested cell lines and greater than 9% efficacy in human primary T cells, making it a compelling solution for CAR T cell therapy research using CRISPR-Cas9 genome editing. So with the CAR T approach, many companies have been trying to identify markers for certain types of cancers and designing chimeric receptors in T cells to target those markers and hence kill cancer. So for those kind of applications, GIPCO CTS TrueCut Cas9 protein will be the preferred solution for engineering those CAR T cells. That's what it means. And this is a very good development. The more and more we have products coming up that offer precision CRISPR-Cas9 or CRISPR-Cas11, the combinations of editing, that much better. It makes it easier for research companies to continue their research, and it costs less because we are now mass producing these tools. And therefore, the cost of any future therapies is also going to go down. So overall, it's a very big positive for genomic companies. And going further, I think that even though all these positives are coming, right now it's not the time to invest in genomic shares. It may be very tempting, but right now we are still in risk off market, in my opinion. We need to see the interest rates stabilize, and we need to see many of the risks that we have devolve. Now, if I was to count the risks that we had, nothing has changed since the last time we spoke about the risks almost a couple of months ago. Inflation is still high. Supply chain is easing up a bit, but it's not completely sorted. It still performs a part of the inflation that we are seeing right now. And then we still have interest rate hikes that are going to go up. Earlier when we were talking about 25 basis points. Now it is 50 basis points. And recently I've heard chatter of 75 basis points. So all those things are going on. Russia-Ukraine crisis is not yet solved. Shanghai lockdown is still in place, and a lot of production is being bottlenecked out there. And its impact is going to flow through in the next couple of months. So there is no date that has been given for removing the Shanghai lockdown. All these things are happening. We still have hyperinflation in Turkey. We have the crisis in Sri Lanka with their inability to pay their debts. We have Russia also having financial problems because their money is locked up due to sanctions. And Europe is going to put an embargo on Russian oil that means Russia is going to suffer more fund crisis. That's the effort to prevent them from continuing further in the Ukraine misadventure. But that's also going to have an impact on European economies with regard to their push towards stagflation. So all these things are there. So I do not see any reason why someone would like to get into a risk-on asset like technology, for example. Even big companies like Apple, Microsoft, and the likes of Tesla are going to have an impact. Then what about genomic companies, which don't even have a product in hand right now? So the best genomic companies I see are CRISPR Therapeutics and Vertex. These are the ones which are likely to make mark because of their sickle cell therapy if they get an approval. And they also have good balance sheet. So that's what I would like to say when it comes to CRISPR. And of course, as I said, Russia-Ukraine crisis continues and Fed is still on the path of tightening. We are in a bearish environment. We are in a risk-off environment at this point of time. So we just have to wait and watch, and there'll be better opportunities to dollar cost average on the way up rather than catching a falling knife. That is my philosophy. You can follow your own approach. Of course, these are all my personal opinions and not financial advice. Please do your own due diligence. With that, let's go and have a look at the other indicators. Since the market has not yet opened, let's start off by looking at Bitcoin. Bitcoin here is again moving upwards. As I mentioned yesterday in our video, we have bounced off the support line out here, the diagonal green line of support, and we are moving upwards. We have crossed the resistance here, which was of 41,356. So I'm going to mark that as a support. Let us look at this here. So in the past, we have had occasions where we have not gone all the way up to the diagonal line on the top, but rather ended at 45,493. So we have that opportunity here. So we have got two hurdles. The first hurdle is at 43,208, in which case we bounce into 43,208 and get pushed back and again test this diagonal line. Or we could go up and break this 43,208.6 and make it into a support. But we are definitely coming down from 45,112 unless conditions continue improving. So there is still a swing trade opportunity out here. If we had bought yesterday, we would be sitting on a pretty decent gain out here. And let us see what happens, because if the history is any indicator of the future, we are bound to be within these two diagonal lines, the red line and the green line out here. And the MACD is bearish, but tending towards the signal line, as you can see through the histogram. And also momentum is just moving towards average and picking up. And if you look at a one-day statistic, you would see that the MACD is already bullish on a one-day time frame and above average for the momentum. So it's looking good for Bitcoin right now. And if we look at gold, gold seems to be falling. Let us go to the one-year time frame, which is what we usually look at. And we still have this line of support here, which is at 1919.32. And that's going to be a support for us. And before that, we have the 50-day exponential moving average, which is sitting at 1925.36. So those two are supports for us. And MACD is become bearish, and momentum is still above average but pointed downwards. This to me indicates that it's probably a good day for Nasdaq today. I don't know the reasons why Nasdaq is going good. I still will go with Tom Lee's approach. There could be a lot of people who are probably borrowing some money and putting it in the market in anticipation of getting a tax refund and catch some low-priced shares at a good price. So ideally, I wouldn't see risky stocks getting picked up here right now, but I would like to see pent-up stocks which are really good shares, which have got revenues coming in, which pay dividends, have got good control over their product pricing, and who have fallen down to a very low level because of the overall market trend. Those kind of stocks will be picked up. The likes of Apple, the likes of Microsoft, I think will do well in the market today. But risk-on assets are likely to face some headwinds. That is my personal opinion. Let us see how the day will turn out. Now let's go on to have a look at where we are with regard to the futures. So if I look at futures, the Nasdaq futures are positive, 50 basis points positive. That's a minor. We still have the MACD, which is bearish and tending towards the signal line, and momentum is just about average. If I go and look at a one-day time frame, I can see that we are marginally positive. MACD is still bearish and tending towards the signal line. Momentum is just above average. It could go either way today because the futures can also change. Now let's go and have a look at our indicators. First, we'll look at US oil. If I look at US oil out here, it's down minus 0.45%. And the MACD is just about turned bullish. And the momentum is above average and pointed upwards. So US oil is likely to gain today, and that could have an impact on Nasdaq. Nasdaq has already fallen minus 5.17%, and it has got support at 19.75. The MACD is bullish but tending towards the signal line, and momentum is below average and falling down. So I think that we will test the support of 19.75 today for VIX. But if oil were to go up, we might not test the support. So everything now depends on which way the oil moves. And if I look at the pre-market for Nasdaq, it is showing a positive of almost 0.46% basis points of 1.58. So I think that Nasdaq is likely to be positive today because there will be more reinvesting of money that was taken out in order to meet tax commitments. So that could be the reason. If you look at the put call ratio, it is back into slightly bullish side. It's fallen below 1. So that's also a good positive. If you look at S&P 500, S&P 500 pre-market is up 0.41%. That's also positive. And again, we have this diagonal, which is now converted into a support. And I'm going to mark that green. So we also have support from 443.83, which we have crossed. So I'm going to mark that also as a support. And once we have done that, we have a very clear picture of where we are. Our next resistance is going to be this. It's going to be the white line out here, which is the 100-day exponential moving average. So Genomics shares are going to have a mixed day. Again, good shares in our sector, especially the ones which have got revenue, will do much better. And we have to look forward to the Tesla results, which will come today at around 5:30 p.m. That could give a good boost for Nasdaq if it comes out right. But unfortunately, I feel that due to the Shanghai lockdown, we may have some results which are not that conducive. Let's wait and see if Elon can surprise us once again, like they have done in the past. With that, let's get ahead and look at our Genomic shares. Well, it's 10 a.m. now and the market has opened. So let's go and have a quick look at where we are. Nasdaq is down minus 0.95 as expected. US oil is continuing to go down minus 1.34%. VIX is also going down. And let us look at our live VIX. VIX is going down, but it's higher than where we saw it last time. Okay, so let's go on and have a look at our biotech shares, the Genomic shares. Just going to sort this to have the winner on the top. So Vertex is doing well today. It has broken out of the pennant and it's back on its way up. As far as its MACD is concerned, it is bullish but tending towards the signal line. It's in an overbought condition. And each of these candles is a one-day candle. So we can wait and see what happens today. And overall, if you zoom out, you can see that we are in a bullish channel. So we have support at the bullish channel. We are quite elevated right now. That's why we are in this oversold position. Vertex is in a good condition. So is Regeneron, even though it is down today. IBB is showing that overall the trend is downwards. And we still have support from this diagonal green line, which has been a resistance before. And we broke over it and it's still acting as a support today. However, today will be very challenging because the MACD is bearish and momentum is below average and falling. So IBB likely to lose more today. IMTX is down minus 0.60%. Again, MACD is bearish and we are having a very low momentum, which is tending to be going towards below average. So again, IMTX is going to lose. Illumina is down minus 0.77%. The next support is at 330.25 and MACD is bearish. So overall, the indicators are showing that we are going to sustain the loss. Novartis is down minus 0.75% and we are tending towards the support, which is this horizontal green line at 90.63. So that's going to act as a support for today. We already bounced off it today. MACD is bullish but tending towards the signal line, ready to cross over. Momentum is falling, but it is still above average. So the bearish trend for Novartis today. Pfizer again is bearish today and it has fallen below all the support levels. It has fallen below the support of 52.20, so I'm going to mark that as a resistance. It's also fallen below 49.83, which is another horizontal support we had. I'm going to mark that also as a resistance. Our next support is at 45.52. We are absolutely bearish in terms of all indicators for Pfizer. Allogen is down minus 1.7%, and all the indicators are bearish, so more losses for Allogen today. Caribou Biosciences is negative 2%, and the MACD is bearish but tending towards the signal line. Momentum is picking up, so there is some hope for Caribou Biosciences, but it may end the day negative given the overall sentiment. Bluebird is down minus 1.91%. 9-day and 20-day exponential moving average are the constraints. MACD is bearish and momentum is below average, so sustained loss for Bluebird. And Intelia is down 3.07%, and it has got a bearish MACD, and momentum is absolutely flat. So Intelia is going to sustain the losses for today. ARCG is down 2.98%. Our next support is at 36.91. Next resistance is the 9-day exponential moving average sitting at 42.56. MACD is bearish. Momentum is also below average. So ARCG is going to sustain the loss. CRISPR Therapeutics is down 3.05%. Our next support is 53.44. And I am going to be looking at 53.44 very carefully, because at that rate, I think CRISPR Therapeutics would be interesting. I'll look forward to dollar cost average. I'm still waiting to see it touch that level, and then I'll scan what's happening in the economy overall and the risks. I think that it'll be an interesting point to move into CRISPR for dollar cost averaging. Next is Beam Therapeutics, which is down minus 4.14%. And we have fallen below the diagonal line of support, which is this green line. So things are looking really bad for Beam. Absolutely bearish MACD, and momentum is also below. So sustained losses for Beam today. Editas is down minus 3.99%. We have just about broken below the support, which was at 15.37. So I'm going to mark that as a resistance. MACD is bearish, momentum is below average, so more sustained losses for Editas. Teladoc is down minus 4.44%. Again, we are well within the bearish channel, upper bound of the bearish channel, and our support is at 54.58, and we are going to have a resistance at around 65.35. So right now we are at 61.70. Negative tidings for Teladoc. DNA is down minus 4.19%, and we are below our 90-day and the 20-day exponential moving averages. Our 50-day exponential moving average is the next resistance. MACD is bullish but tending towards the signal line, and momentum is falling. Negative day for DNA again today. Verve is down minus 5.10%. We are still within the bearish channel, which is bounded by this diagonal line, and our 9-day exponential moving average is our next resistance. MACD is bearish and momentum is also below average. More losses for Verve today. PSEB is down minus 5.44%. 9-day exponential moving average is our next resistance. MACD is bearish and momentum is also below average and falling. PSEB is not going to make any gains today. So that brings me to an end of our technical analysis for the genomic stocks today. It's a washout session today, and probably for the near term, because we are all in a risk-off environment, and it's going to be very risky for investors to put their money into genomic shares, especially the ones which are still in clinical trials and may have a dodgy amount of funds left in the balance sheet. So the only good ones seem to be CRISPR Therapeutics. Apart from that, everything else looks shaky to me. With that, I would like to end the session today. If you like this video, please put a like there so that we can be exposed to more audiences by YouTube. And also, if you're not a subscriber, please subscribe and help us get above the 400 mark. And thanks and have a great day. I'll see you tomorrow. Bye for now.